Oh, yeah. So write it down. And every time you go and try and sell something or change your position, ask yourself, has something changed versus your thesis? So a lot of people, their thesis changed, but they hold on to the position because they're emotionally attached. We've all done that. Or the other one is you get spooked out of something and you forget your thesis in the first place. And then you're like, then it goes back and you're like, shit, I've missed it.
In the wake of Federal Reserve Chair Jerome Powell's extremely hawkish speech, we are having another of the crypto market's infamous volatility. Bitcoin, the world's largest cryptocurrency, took a nosedive from Friday's high of $21,700 to $19,889 on Saturday. Ether is also down to $1,479, a 9% decline over the past week. While the worst damage from the speech seems to be over, with Bitcoin now back above $20,000, further hawkish moves from the Federal Reserve will have more negative effects on the markets. This means that crypto investors may have a lot to deal with in the coming days or even weeks. This is why we have brought you this important message from Real Vision co-founder and CEO Raoul Pal. Raoul Pal, a former Goldman Sachs executive, has over 30 years of experience in the financial markets. He has also been a part of the cryptocurrency market since 2013, when he bought his first Bitcoin at $200 per coin. In a recent interview, the macro guru discusses the ups and downs of investing, sharing valuable tips that can help investors avoid the mistake he made when he sold his Bitcoin in 2017, shortly before the coin made a 10x move to the upside. Raoul Pal counsels having a written investment thesis and sticking with it regardless of market conditions. This is a video that every investor needs to watch, especially in the current market conditions. So ensure you watch the video to the end, subscribe to the channel, and give this video a thumbs up. You can also drop your comments and observations in the comments section below and turn on post notifications so you never miss any of our regular uploads. Everything you do helps with the YouTube algorithm. Thanks and enjoy the video.
So I first heard about Bitcoin during the European crisis in 2012. I realized that this was a solution to a lot of the global financial system. And I wrote the first macro strategy piece on Bitcoin probably ever published in Global Macro Investor in 2013. And it was driven by a friend of mine, Emil Woods, who's is very well known in the space, and Chad Cascarello, who are Global Macro Investor subscribers, saying, listen, you need to look at Bitcoin. So I looked at it. They happened to have started an exchange called ItBit, which is now Paxos, and I ended up buying Bitcoin. And I stuck a decent size in because my analysis was, it's at $200 now. If I back out the analysis versus the stock to flow of gold, this is worth $1 million with gold at these current prices. Therefore, it's underpriced. I hadn't figured out anything else about network effects, but I kind of understood that this was potentially important. And I assumed that it would go to zero. So my downside was 200. My upside was 999,000, blah, blah, blah. And then I said, I assume that I am a total idiot, which I try and assume most of the time. And therefore, I'm 90% wrong. So if the upside is 100,000 and it's $200, it's the best risk reward any of us will ever come across in our entire lives, and maybe one of the best risk rewards of all time. So I took that bet, right? Macro thesis, did the work, said this is probably a 10-year play, and I'm going to hold it. So first thing that happens, I put the position on, it goes up 100%. It goes up 100% a month and 500% in the next 4 months. I'm like, holy shit. I don't sell any because I've got a long-term thesis and it's fresh in my mind. It then falls 85%, but luckily back to my entry level. So it gets back to 200. I don't do anything because I had a long-term thesis. And then I kind of forgot about it. And then 2017, it starts coming to life again and it's starting to scream higher. And now it's at 2,000 or 2,200. And I'm like, okay, I'm up 10x, which is good. My thesis obviously was a lot more, but I'd forgotten that because now the forking wars had started. And I suddenly thought, is this existential? Is this the S-curve moment where it fails? So I sold it. It went up another 10x to 20,000. I didn't worry about that because I'd made 10x and it was okay. It was a good trade. And I was worried that it wasn't going to be able to play out my thesis because of these forking wars. And then it fell 85%. I wasn't in it. And eventually I got in April 2020. And I can't remember what my average was. Call it 6,800 or something. And then I'm still long and then, rotated into ETH and did other stuff. But anyway, so great trade. One of the best trade of my life. I went back and looked at, if I just kept my initial investment at $200, I would have done, I can't remember that I'm 5 times better. Even though the size that I added in March 2020 was massively larger than the first size
Interesting.
It still didn't work. I'm like, huh. And then I thought, okay, if I'd actually followed my thesis, which is when it gets very oversold, and it gets to that kind of logarithmic, the bottom, the 2 standard deviations oversold of a logarithmic channel or whatever, if I'd actually just doubled my position every time, but not doubled it, sorry, just added the same amount as my initial seed investment, I'd have done like 25x. I'm like, okay, so what I thought was a great trade was actually a terrible trade because I didn't trade my plan and I didn't think about what I was trying to achieve. So that leads into the question about, okay, the market sell off now. I'm immensely comfortable because I see the network adoption. I've got even more models to understand how this space works. I see how broad and deep the talent, the adoption, the kind of conversations that Greg and I have with people all the time, it's like seeing the future. So therefore, the volatility now, I've been adding as fast as I can, scraping the sofa for coins, anything to put more money in.
Raoul Pal went from thinking he had made a great trade with a 10x upside to realizing he had a terrible trade, something that would have been completely avoidable if he had stuck with his 10-year time horizon. In his interview, Pal also talks about the importance of occasionally moving away from the charts. He explains that doing this instead of always stressing about the peaks and bottoms will help you further appreciate your crypto investments.
Because I've got a big picture framework that is robust and tested and is deep. I've done a lot of work on it. So I feel comfortable with the probabilities. Now, I love markets like anybody else. So I've got on my screen the real-time chart of ETH daily, weekly, monthly, and hourly. I don't even trade ETH. I just buy it. But I like the market and I look at the price action. And what I did the whole period was just didn't look at my P&L. So I've learned, and this is a new thing for me, how to disassociate myself with my P&L. Because if not, you're always thinking peak to drawdown or look how much it's worth now, as opposed to how far are we along in my thesis? Let the numbers take care of themselves over time. I'm learning that because, this is a hard one to learn on because the volatility is so high. But I've done it similarly. I mean, I had a very strong view in 2012 about the US dollar and the euro. I was living in euros, billing in euros. GMI was based in euros. I was living in Spain, and I thought, based on a bunch of work that I'd done, that the euro was going to fall over a long period of time, and it was going to fall to 85 cents. 82 cents was my target and has been my target since then. So I took all of my savings, which was a reasonable amount at the time, and stuck it all into dollars. Then to force myself not to trade it, I bought a couple of properties, one in Cayman and a small place in Miami, in dollars. So I couldn't, therefore, I was now in the trade properly, and I changed the billing of Global Macro Investor in dollars. And that was a phenomenal bet because that was at 148.5 in the euro. Still hasn't got to my target, but it was there, So I've done it once, but that was easier. This one, Bitcoin's harder. Otherwise, I don't tend to have run so many really long-term, massively volatile positions. My positions are normally 6 months to 2 years.
Once you think about Raoul Pal's interview and his strategies for conquering the markets, please drop your comments and observations in the comments section below. If you like this video, consider giving it a thumbs up and sharing it with other investors. Also, ensure you subscribe to the channel so you never miss any of our videos on cryptocurrencies and the economy as a whole. Thanks for watching.